All right, everybody, good afternoon. Hey, good afternoon. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I sold a little bit of Alibaba puts. It's a very small position today. And I did not much else. I scalped a little bit of Qs off the open for kind of a gap fill trade and made a couple dollars with it. I thought about reshorting at a certain point, like 11-ish, when we had that failed breakout on the intraday. And I didn't. I was just been very conservative these last couple of days and waiting on the Fed like everybody else, as is this market. So we'll see. We kind of had a little bit of a push through failure on the S&P today to all-time highs. Pre-market and off the open, the beginning of the day, we were trading at all-time highs, but we didn't close above. So there was a chance that today could have been like a breakaway gap or breakout continuation day with some upside momentum, just technically speaking. I didn't think that was actually going to be what happened, just because, again, we're moderately extended. I think we opened up like $7 of extension from the ADMA on the daily chart, and we have the Fed tomorrow. So that really wasn't my base case scenario, but technically that we did have the potential of a breakaway gap today, and that failed. Kind of a non-committal candle here at the end of the day. A little bit of a doji, a little bit of a downside tail because we were able to rally off lows into the close, but we certainly did not close at highs either. But in reality, there's nothing to read off of today's candle. The picture will almost definitely change tomorrow with the Fed. So tomorrow, 2 p.m. is the Fed announcement. The day of the Fed up until 2 p.m. can actually usually be a little bit boring also. We typically get our normal early day price action, price discovery period, and then I really oftentimes recommend trading very minimally or not at all between like 11 and 2 on Fed days. There's just nothing going on. All bets have already been placed by that point. And then 2 o'clock is when we're going to get the announcement. And we'll see, 25 basis points or 50 basis points. Last I saw this morning, the market was pricing in like 42, 43 basis points worth of cuts. So in other words, the market is leaning towards 50 basis points. I think we here in the VTF, per the poll that Pat did earlier, and it's been my own thought process as well, I think that we've been leaning towards 25 basis points. But the jury's certainly out. There's more uncertainty around this Fed announcement tomorrow than there has been on any Fed action in quite some time, which is actually a little bit exciting because we know it's the uncertainty, it's surprises that actually create larger moves. With that said, it seems to me, or it feels to me, that the risk is becoming more and more to the downside as we sit at all-time highs and as we price in more and more towards 50 basis points. Because if you get 25 basis points at this point, that actually becomes a disappointment on the easing cycle, and maybe we sell off. And then if you get to 50 basis points, I still didn't think that there's a chance that the market interprets that poorly just because it's like, hey, why are we cutting by 50 basis points? Is there a recession that is on the horizon that no one really sees? But as far as the surface level thinking of more cutting being good for the market, 50 basis point cut is getting pretty close to, it's not fully priced in, but it's starting to get pretty close. So there might not be a lot of upside juice on the actual 50 basis point cut. But we'll see. You combine that with some very weak seasonality at this time of the year, and it's still difficult for me to be very bullish right now, even as we're pretty much sitting at all-time highs. The S&P's a hair away from all-time highs, ticked it intraday today, but failed to close. So we'll see. It's all kind of speculation at this point, but I actually think the risk is to the downside on the event tomorrow, and as a result, I've just been continuing to be pretty patient on doing too much new aggressive trading. Literally the only thing I did today was an early short off the cues, pretty much versus that opening high. I was out by this touch of the ADMA on the 5-minute and never re-entered the trade. That was the extent of what I did. One of the better trades of the day, though, was probably the Tesla 230 breakout in the beginning of the day. It gave pretty good juice on that trade, and the risk on it was really only 60 cents off the opening low. I wasn't involved, but the initial pop alone brought you almost $4 worth of reward off that 60 cents worth of risk. But then that trade eventually failed also as the market weakened out in the afternoon. So I think it was a good call this morning to once again take a less is more approach. I really did not have many ideas out there that I liked. A bunch of you guys were looking at this Tesla wedge break as an opportunity, and it did give some immediate technical follow through to the upside before failing. And outside of that, really not too much going on. The Chinese names were interesting at the beginning of the day, but they kind of faded pretty hard. This Alibaba in particular faded pretty hard. Baidu faded pretty hard. But like I said, I think that the entire picture changes tomorrow. So I don't really have too much else to talk about, as we're just all kind of waiting and watching. And it's just I think it's important to remember, it's worth reminding that you don't always have to trade aggressively. I say that for myself as much as anyone else. I got so used to trading very, very aggressively for several months before I went on this vacation that I found myself the last couple of days, like, with the game plan of trying to do less is more, just sitting here like almost like scratching myself, like the oh man, what's the my brain gets a little bit tired at this time of the day still, just because I got a little bit of jet lag that I'm catching up on. But what Dave Chappelle on the Chappelle Show, when he was like the crack addict, I feel like that's kind of me the last couple of days when I'm trying to like not trade as much. I'm just like scratching myself, looking at the market, just like itching, like, oh, I want to trade, I want to make money, I want to trade, I want to make money. And sometimes you got to remember that trading, yeah, that's the one, Jim. That flat is a position. Sometimes sometimes less is more is the best thing that you can do, just to preserve your bullets and just wait until you're at a more advantageous time. And tomorrow we'll probably get some movements that'll create for good day trading opportunities. But honestly, for me, as far as doing things big picture, which I find is where I make most of my bigger money, is on bigger picture trades that I actively day trade around. I probably want to be hands off almost until we get to the election, is what I'm thinking. I don't like the market setup big picture right now. I don't like the seasonality picture setup right now. I would love like another real big dip or something like that to kind of set us up better for an end of the year trading opportunity that I think could set me up to make bigger money. The concern about that, though, is it seems like that's what everybody's looking for right now. And if everyone is looking for kind of a bigger dip opportunity, and everyone's concerned about late September trading, and everyone knows all this information already and are positioned too lightly, and this market actually really does break out to new all-time highs, you could see some real upside chasing coming in, as a lot of funds are under positioned for a big upside move, and I probably would be joining them to some degree at a certain point with it. So we'll see. Patience is the name of the game for me right now, and flat is a position, and I'm fine just his last couple of days just putting on some scalping trades that put some money into my pocket and being selective with it and doing it light, but making a few dollars and saying to myself, hey, I can be, okay, just putting $1,000 in my pocket or whatever. So yeah, that's pretty much all that I've got, which isn't too much. I am happy to answer any questions that any of you guys may have. So feel free to post them. Not seeing anything in the VTF yet. Over on the YouTube from Uvixi Bull, do rate cuts after the first one historically get front ran less? Do rate cuts after the first one get front ran less? So historically, the Fed is very different now than it was in the past, just because the Fed guides what it's going to do so well. Historically, really prior to Bernanke, if you go back to, I guess, like Greenspan and before that, the Fed didn't really forecast what they were going to do too much ahead of time. They just kind of did it. So every event was a bigger surprise, and that made it more difficult to front run it. The idea now of the Fed being super, super transparent and pretty much almost always telling everyone what they're going to do before they do it is a relatively recent phenomenon. But the market does a really good job of pricing in information very quickly. So if the Fed is forecasting that they're going to cut by 25 basis points or 50 basis points or whatever, the market tends to price that in very quickly. So that shouldn't change. If anything, this event tomorrow is a little more unusual of a situation than what we've seen in quite some time, because the jury has been somewhat out on whether or not it's going to be a 25 to 50 basis point cut. So the market hasn't been able to fully price in the event in the way that it typically does. Though now we've seen, especially over the course of the last several trading sessions, that the market's really pricing in more and more of the 50 basis point cut. So we'll see how the reaction goes to that. Who are you and what have you done with Derrick? Says Josh. On the one hand, I got the Tyrone Bigham itch to trade, but on the other hand, it's actually been a little bit nice to not trade hectically. I think today I traded like a tenth of my average trading volume that I was doing before I went on vacation. Literally like a tenth. Very, very small. And again, I'm cool with it. What else, guys? Any other questions? Anything else for today? Happy to do another quick one. I know we're all just anticipating for the Fed tomorrow. But also happy to answer questions, because that's what I'm here for. What conditions do you look for when trading a longer term hold? Sure. So it depends on the type of trade that you're... So any type of trade that you're getting into needs to have a game plan before you get involved in it, obviously. So that's number one. And there's different types of trades. Even if you think about day trading, you can have your counter trend extension scalp trade, you can have your breakout trade, and it's the same thing on longer term trades. You can have different game plans or different time frames for the trades that you're taking. So what I typically am an advocate for when it comes to longer term trades is you got to have a good looking daily chart, and then a lot of times what I want to do is basically take a day trade that's in the direction of that longer term chart. Take a day trade, which is what you should do even no matter what. Even if you're a pure day trader, you want your day trades to be in the direction generally of what the big picture is telling you, and then you're going to have a higher probability of success. So then if you take a day trade, if you take a breakout or whatever, and then that position closes really well in your favor, and the daily chart looks great, then you could swing that position to make it a longer term hold to try to get more out of it. Then you're in a win-win situation. You're playing with the house's money. You are in a position where you're either going to make a lot more because the daily chart's going to continue in your favor, or you are going to give back some open profit and still potentially make money if the trade stops you out. So that is a big thing that I advocate for swing trading, is to hold positions overnight and for a longer term when you're in a win-win situation, and not hold positions that are against you. A lot more of what I've been doing the past couple years, and I've spoken about it a lot in afternoon meetings, is kind of these like cash flow trading strategies where, you know, I have a bigger core position and then I'm, you know, selling and then rebuying percentages of that position, oftentimes incrementally. And then what I can do off that is, as that makes me more profit, if I want to continue to potentially trade it to break even, I can like lower my stop and lower my stop. And then that can potentially then become a trade that I might be in for months or years at a time at that point, where it just continues to make me more and more money, provided that it never gets back down to that break even point, and every day that goes by gives me a stronger profit cushion. So I still want to be entering those types of positions when I think that the big picture is advantageous for me. And I just don't think that the big picture, even though we're sitting here at all-time highs for the S&P, I don't think that the big picture is advantageous for me right now. If I can get, I mean, you know, think about stock that you may have, and this was a big buy day for me and a big buy day for a lot of us, because I remember back here on August 5th at the open that day, I was like screaming from the rooftops that we need to be buying with both hands and both feet. I mean, think about if you're long stock from SPY 511 from August 5th, and we're going into the Fed tomorrow at SPY 563, are you really worried about what's going to happen tomorrow? I mean, sure, on a really bad case situation, we could trade back down to 550 or something tomorrow, and you give back $13, $14 of open profit. But are you really worried? The answer is no. So that was a tremendously advantageous day to be doing heavy buying. And again, we called for that here in that morning meeting like perfectly. And then you can still like buying on those days, buying in those advantageous periods, that can pay you dividends for months and months and months to come. Like those are the types of opportunities that I really want to be able to take advantage of. So for me right now, in front of such weak seasonality with this period of time here, this end of September, it's just historically such a bad period of time. It doesn't mean that it has to be that way this time around, by the way. Like I already mentioned that there's a possibility that if we break higher on the Fed tomorrow, everyone's very underpositioned right now, and then you get a lot of chasing, and it actually could be a really strong end of September, a really strong October, a really strong period of time from now through the end of the year, as everybody has to, you know, chase price to get back involved, because we know that a lot of the funds are pretty underinvested. We know that the CTAs are at the 66th percentile as far as their longs on right now, so that could certainly happen. But for me personally, just in front of the Fed risk with such a weak period of time, and again, I do still have some longs on. I do still have long positions on right now, so it's not like I won't participate in a rally at all. But I've got enough firepower put aside where if we get a bigger sell-off over the course of the next month or so, month and a half, I can be in a really strong position to take advantage of it when the timing on that is right. So that's kind of what I'm looking for, and a lot of how I've been trading those opportunities recently. So hope that helps, Ian. Appreciate the question. From Rich, we had a meeting with Pat last week where he described taking off 25% of your position at 1 to 2 instead of the 1 to 1 spot. Can you describe a situation where you operate in that style? Want to see how your answer compares to Pat. Sure. So it's just generally not something that I do, to be honest, unless it's like a real A plus setup. You know, the benefit of covering your risk by selling 25% of your position at 2 to 1 on your risk versus 50% of your position at 1 to 1 is that it's a much greedier game plan. You'll have much more of your stock for potentially a much larger move, and therefore you can potentially make a lot more. But you also have to be right a lot more. And, you know, again, I find it for myself, and I find that for a lot of successful traders, they're wrong more often than they're right. But I think that if you are wrong on an idea, but you are good at execution, that getting 1 to 1 off of good execution is relatively easy. again, the caveat is you have to execute well. You have to be able to execute well. It's relatively easy. And then you can just be wrong over and over and over and over and over again and not lose any money, and then just be right once in a while, and then have those trades really work for you. So I've always been an advocate of the 50% of your position at 1-to-1 to cover your risk style, but it's certainly not the end all be all, and you should assess what works better for you and for your statistics over time. And I've been doing a lot of experimenting with that kind of cash flow strategy again that I was just describing, where my first sale might be a 10th or a 20th actually of my position, and it might be at less than 1-to-1, but it's only a 10th or a 20th of my position. But then I'm able to kind of begin to work that strategy where I can sell it and rebuy it and sell it and rebuy it. So that's my answer for you. Yeah, I mean, it's always about all the layers of probability. So extension can be a layer of probability. The daily chart setup is a layer of probability. Trend, relative strength, relative weakness, the market, all those things in play are layers of probability that dictate to you how greedy of a game plan that you want to have. Generally, the higher your risk-rewarded probability of success, or the higher you would grade the trade setup, the more greedy of a game plan that you want to have on it. And that then it makes more sense to maybe just look for the selling of 25% of your position at 2x reward compared to 1-to-1 for 50%. So appreciate the question, Rich. Anybody else have anything? Nothing new in the YouTube. Nothing new in the VTF. All right, so happy to just do another, shorter update from Jim here. General consensus is risking 1-2% per trade, but in reality, how much more would you risk for an A+ setup? So for a real A+ setup is where I typically am interested in risking 1 day's worth of risk. And 1 day's worth of risk, again, you can put skew around it, but that could be as much as 5% of your account on a real A+ setup. But that's your entire day. Putting your entire day on that setup because of how you view it. And if it works, you're going to make a lot. If it doesn't, you're going to lose a lot. But the idea is that the probability of success is so great that it's an A+ setup. So you should have a pretty high probability of success working for it. So that's my answer for you on that one, Jim. Definitely risking more. All right. Doesn't look like we had anything new. So again, I'll wrap it up there. Hope everybody had a relaxing trading session today and didn't push it too hard. I know I kind of did. Because tomorrow, 2 o'clock, and then the day after the Fed day can often be the trend day, all that stuff. So tomorrow, 2 o'clock through the end of the week, probably will be a little bit more exciting. So get a good night rest, get some exercise, and I'll see everybody tomorrow. Have a good night.